throughout the most recent couple of days as downturn gambles have been mounting and financial backers have been truly thinking about what may be next for our economies. We've been getting a constant flow of information in regards to multifaceted investments, funding firms, essentially institutional financial backers who should be the shrewd cash on the lookout. However, they've been losing cash at a mind-blowing rate during the initial 3 months of 2022 as they've been irritated in outright strife. Today, we will discuss two firms, SoftBank and Tiger Worldwide, who have been getting totally violated as the buyer economic situations under which they caused their billions to have changed, and these financial backers have been unequipped for changing and adjusting to that new climate. So the thing precisely has been continuing great. First and foremost, we have SoftBank, who are a really tremendous name in the financial backer space. A Japanese asset is renowned for its $100 billion vision store, which should distinguish and put resources into the following greatest organizations on the planet. It had a few enormous accomplishments in the past, being an early financial investor in Uber, DoorDash, and Open Entryway, a few pretty colossal and all-around run organizations. Yet the greatest win for SoftBank was a $20 million early interest in Alibaba, now worth someplace in the area of $60 billion, yet with no guarantees. So regularly the case with funding firms like this, their prosperity goes to their head, and they forget about what they ought to be put resources into as the funding scene got unbelievably cutthroat and firms began going up against one another to put resources into new companies. Now, really, this is a problem with venture capital and Silicon Valley itself, and it's really coming to a head these days. Just last week it emerged that a startup in the US called Fast, a payments processor worth almost $1 billion, has over 500 employees, and yet only $600,000 of revenue. To be perfectly frank, that is absolutely pathetic. And the fact that the company continued to receive investment from venture firms based on nothing. So what was SoftBank's greatest misfortune? Well, I don't think I'll get a lot of flack when I say that WeWork was presumably the one that fits that charge the organization was plainly an extortion. Practically comparable to Theranos run by an unhinged hipster who some way or another figured out how to persuade the president of SoftBank that he was for all intents and purposes the second happening to Christ. In the end, the organization gradually went to pieces, which came about in SoftBank losing $8 billion on this single arrangement. Yet I deviate, since today we're discussing SoftBank on the grounds that their NASDAQ whale portfolio has been sold in the wake of losing another $7 billion. Now this little asset runs under the SoftBank brand, under the name of Northstar, and it truly established itself, purchasing up the sort of stocks that Kathy Wood likes. NASDAQ recorded tech organizations that discussion a ton about advancement and imaginative obliteration, yet truly they for the most part make programming that they charge continuously for, have tremendous measures of rivalry. Yet they develop at a really gigantic rate. The fact of the matter is the product as an assistance model isn't maintainable in its present structure, and over the drawn out, the enormous edges that these organizations have will be disintegrated away in light of the fact that the contenders are normally fundamentally similar. The best illustration of this is, as I would see it, DocuSign, who essentially permit agreements to be traded web-based. They're a fine organization, their product is great. The issue is there are more than 100 contenders who give a close to indistinguishable item, and over the long haul edges will be driven somewhere near this reality. The main explanation they aren't being driven down yet is on the grounds that they can develop at crazy rates by again tossing cash at that development. Currently back in 2021, Northstar held $17 billion of NASDAQ organizations. It lost $7 billion inside and out as the file all in all. Yet specifically, the more modest organizations on the NASDAQ crashed in all cases by 40 or truly definitely a larger number of than that. Only $1 billion of stock from that index. Really what we're seeing here is the fund diet lost huge amounts of money buying into hype and has basically had its assets stripped, as Sun, the CEO of SoftBank, has now fired the man who ran that fund for his failings. Next, then, we have Tiger Worldwide, one more multifaceted investments that focused on high development tech organizations. This one, however, is controlled by Pursue Coleman, and he fundamentally turned into a star multifaceted investments financial investor practically short-term as he made billions overnight. Yet, similarly as we saw with SoftBank, Pursue has been totally unequipped for recalibrating his asset and changing alongside the times. What was once a $100 billion behemoth is floundering toward the finish of walk. As for obviously, that is the primary quarter of the year, we see that Tiger Worldwide lost a huge 34 over only 3 months, that is following the whole of 2021, where the asset lost 7%, and afterward on top of that too. This is taking a gander at the asset after the 14-day long assembly that we recently saw, so Pursue is quite fortunate to just be taking a gander in misfortunes of $34 billion. Now he has emerged with an assertion to his financial investors, saying at this time, we are lowered yet consistent in our conviction and certain about the go-ahead open door. We are reconsidering and refining our models, utilizing every one of the data sources accessible to us. Unexpectedly enough, back in the late noughties, Pursue saw an extremely unfortunate year, as well as the worldwide monetary emergency hit, and his assets saw misfortunes of 26. That time he came out and said that he planned to pull together on his tech courses, where the organizations he put resources into couldn't be disrupted by legislative issues or full-scale occasions. Honestly, that is a ludicrously moronic comment, thinking about how the tech blast in the course of the last 10 years has been filled by quantitative facilitating and free money-related strategy, and sooner or later, that was continuously going to end and the bull go for it. He likewise assumed that tech stocks are some way or another resistant to large-scale occasions, which has been completely disproven in the course of the most recent few months as tech fell the hardest on the conflict in Ukraine. It doesn't help that Tiger Worldwide is an enormous financial investor in China too, with its stake in JD.com being the greatest in its whole asset. Apparently, he thought that Chinese tech companies were immune to the moves by the CCP as well, something which is obviously just not true, to make matters even worse. The tech crackdown in China has not stopped, it's just not being reported on right now. As we speak, the CCP is targeting live streaming as its next victim, something that I will be explaining to you all in absolute full at some point in the future. Now, this generally sounds somewhat natural, no question, to somebody we've spoken about a ton in the past. Cathie Wood, obviously, and her lead reserve RK, which has come to typify the tech publicity financial backer, with it in a real sense being utilized nearly as a file reserve for the NASDAQ organizations that have been tricking the most. Now, Cathie, like Tiger Global and SoftBank, were revered and celebrated for their successes a mere 2 years ago, only to be utterly mocked today. I even happened to come across this little article while writing this video, literally comparing Tiger Global to SoftBank, and considering why they're seeing so much success and how they turned Silicon Valley on its head. Despite being a year old, that article is now pitifully obsolete and will serve to me basically to act as an illustration of how media can assist with engendering this sort of bull run to actually nothing is invulnerable to our states. Not least speculations, regardless of how incredible you think the hidden business is, its valuation will generally be subject to what is happening on the planet, who is in government, and what those legislatures are doing, and on the off chance that there's a downturn, well, tech will perform more regrettable worse in light of the fact that as liquidity and capital evaporates, those 50 income developments year over year are essentially going to evaporate too on the off chance. If you enjoyed this video, then make sure to like, comment, and subscribe.